Hi, this is Sean with an example module. Sean with the Emerald course package. This particular example module here, um, we will be going over some screenshots from the terminal. I will be going over some example screenshots and breaking down some of the information and giving you my opinion based on my experience of being in this industry and some of the things that I've seen over the years. So here is an example on the screen of a screenshot. This is basically what you see on the terminal, and there would be different tabs and different pieces of information based on which screen you're looking at, okay? Now, this particular one here, when you look at the top here, you will notice that it says Fannie Mae pool. So this is basically a Fannie Mae pool, a Fannie Mae related securitization pool. Okay. So obviously Fannie Mae is a big name. Um, and what you see here, this would be one of the initial screens. And this would be considered a summary screen. And basically, when you're on the terminal, and I myself used to be early in my career, I was a database researcher. And so I would do research on this terminal, and there was another popular one as well that we used to use back then. And so this one obviously is going to be one of the main top of the line type of terminals that are used. You know, these terminals are used by hedge fund managers, Wall Street traders, big time firms. And so, it's technical, but obviously, with my experience, being in this industry, over 10 years, early in my career, this is one of the things that I was actually doing. I was actually a database researcher. So, um, try not to get too caught up with the technical data. Sometimes when you're looking at these screenshots, there could be main pieces of information that you're looking for. For example, like the pool value, what's the overall value? What is the specific name of the trust? Is it still active? Sometimes you can tell when you look at it. So, I wouldn't say get too caught up with all the minor details. Of course, you're more than welcome to, but in the beginning, obviously, it can be overwhelming when you're looking at all this information. I mean, just look at the screen. If this is the first time that you've seen this, obviously it's a lot of information. And this is just one screen of many. So this is just one screenshot, and there's other screenshots. So I would say just in the beginning, when you're looking at it, try to just focus on the main pieces of information. For example, just look at the top and just, okay, that's the name of it, Fannie Mae pool of the screen. So now you know this is a Fannie Mae pool, okay? And then you'll see like a date sometimes in the top left-hand side or somewhere else. So you'll see when it was pulled or those type of information as well. Yield here, yield is a yield percentage, here you see the figures here. However, just kind of, and for the sake of the example, I'd say just focus on some of the main pieces of information and then, and then go and make your way down to some of the more minor pieces of information or some of the more technical pieces of information. But here, this is considered the summary screen. So basically, when we look at this, we're like, okay, this is the summary. This gives you a summary. Okay, so you see like there's different sections here. So you see the summary here, and then you see the pool information. Okay, so this obviously is a Fannie Mae pool. Okay, and you have different like identifying numbers, things like that. And then you'll see an originator here. Obviously, this originator is along the lines of some type of lender or bank or financial institution. Okay, and then you see the pool information. Okay, collateral information. This is going to be the collateral. Okay. And this is a interesting part of the summary. In this one here, you'll actually see the number of loans. And you see here, it says number of loans here. And so from the data, this screenshot, there's actually 108 loans. That's an exact figure. So this is telling you that there are 108 loans in this particular pool. Okay, so keep that in mind because that's one of the things people wonder or ask about in their research, where this one is telling you, okay, there's 108 pools in this particular pool. Here it is right here at the bottom screen here. Um, and then here you'll see the balance, obviously looking, the balance of this trust. Okay, you're looking at about $141 million at the date of this particular pool. I just want to stop just for a second here. My name is Sean, and I am this information is basically for educational entertainment purposes, and I am simply a presenter of this information for this video. Just needed to say that. Okay, so we can move on now. So you see the balance here. And this is interesting. This is one of the things that you want to look at. Sometimes you'll see an original balance. So this is telling you the original balance of this trust or this pool. So this $141 million roughly. And then you see the current amount. So it went down to $14 million. Okay, so that can be an indicator that can give you an idea of many different things of why that happened. Now, obviously, that's a huge margin. I mean, you're talking, 100, million dollars here of loss or balance transfer, or something has happened where this particular pool, this particular securitization trust started out at $141 million and now it's at $14 million. See, that's an indicator. That's something that in your own research, something you can go research. Now, what I would do is I would go online and search this pool and search to see if there's anything related to a pool, maybe a big case, or maybe there was a class action, maybe not. Maybe there was something along the lines of a large transfer. There could be an array of things that has happened. I mean, me personally in my career, I have literally seen, and this was on the SEC database, because that's one of the databases that are used as well. And I actually used to, I actually go on that database as well sometimes. Um, but I've seen a securitization trust listed on the SEC, okay, with all the documents that were there, because they have to file the 10-8K and the prospectus and the PSA. There's all these documentation that they have to file, right, per the SEC guidelines. Now, I've seen it where the actual trust, that data, those documents were depublished. They actually removed them. And so the auditing team went in there and they're like, hey, Sean, look at this. And I went and I was like, whoa, this is interesting. I mean, literally the trust depublished the data. They took the data off. They removed the data. So when you would go and look at it, and this is public information, the data was removed. So they removed the pooling and service agreement, they moved the 10K, they removed their documents, depublished them completely. And I believe in that example, there was a situation where there was there was blatant fraud and there was a lot of lawsuits along those lines. There was something legal going on. And there might have been something really, really on an exposed level to that trust where they depublished the data. So literally, the data was depublished. Now you could still see the trust name, right? Because the SEC database is still gonna have that, but the information they were able to depublish it. Now think about the hoops they had to go through the SEC, the public databases, contact these people and get their information depublished. Think about that. Think about how severe of an action that is. Now, I'm not accusing them of anything. However, there is a reason, or there could be multiple reasons why they did that. And that's going back to my example here. So you have a balance here of $141 million, and now the current balance is 14 million. Obviously, there's a huge margin here, and there could be a reason why this balance is at the $14 million when originally it was at 141 million. So that's something that you think in your notes and take note of, because as you go and do your own research or, your own learning, that's something that we have to consider. And that's why it's important to have these screenshots when available, when published. Of course, there's other databases as well, but it's important to know this information and look at it critically. Look at it in a way where, okay, why is the balance low now? Why is it that, the balance started at this and now it's low, much lower? So that's something to keep in mind. So we'll just go on to the next screen here. This is more of a like one of the other screenshots, more of a issuer speed information, kind of like a summary. Um, Again, showing the balance and the remaining. This is kind of a different style, but usually you're going to see the screenshots in this style. However, this is also, it's kind of a different look. This one again, just showing you the balance, the remaining balance. Okay. Um, payoff speed, um, these type of information. Okay. An interesting aspect of this particular screen is it actually gives you the pool number here. Okay. And it tells you mortgage type. Okay. So now okay, when you're looking at this data, that this is actually a mortgage pool. Now, as you guys know, mortgage pool, there's also, auto loan securitization, credit card securitization, business loan securitization, personal loans along those lines. So keep that in mind, So this one here is going to be mortgage. So basically what that's saying is that in this particular pool, these are going to be primarily mortgage loans that are securitized into this pool. Okay. And here's you have the CUSIP number. Now this is going to be your main or master CUSIP. The term that people throw around, this is going to be your master CUSIP. And then obviously with this information here, further information can be ascertained. You can input this CUSIP number into other databases and pull other information from different sources as well. So this is going to be your main CUSIP identifier, and the pool number is going to be right here. Okay, we'll go on to the next screen. Okay, this is the screen, okay, that's basically showing you different pieces of information. Okay. This is telling you basically like, okay, for example, we saw earlier in the screen that it indicated to us that there was 108 mortgage loans in this particular trust, right? So this is, if you look under here in the middle under loan composition, this is telling you the type of loan as far as purchase or refinance. And so that's one of the things that you'll see in these screenshots. And that just indicates to you, what type of loans are in there. Obviously, you see here, there's 105 refinanced loans in there. So that means that the loans that were refinanced, okay, with a particular lender was securitized or transferred or monetized to some degree into this trust or pool. And so that's going to be 105 different loans, and those were all refinances. And so it'll actually tell you the balance of those 105 loans is about $13 million. So, and some change here, as you can see. So that means that those loans that were refinanced, this is the total accumulation, the total balance, right, of those loans that were refinanced. It's in this trust, okay? And then purchase loans, looks like there's 3 loans in here that were purchased, somebody buying a house, right? And that balance is about shy of $500,000, so about 449,000. And so it tells you the balance percentage here, 96% of the loans, a 96 percentile is refinance loan into this trust. Okay. So that's good to know because, obviously if, you want to have as much information when looking at a trust because, this can indicate to you that obviously there's a lot of refinance loans into this trust. Now, if you as a researcher or just looking at somebody's loan or and basically you see that it's a refinance, right, and it fits this criteria, or perhaps you see this pool named, then you can better ascertain as to what's going on. And this would be one of the trusts, right, that it could there could be some connection there based on the research and the documentation. But again, that this particular pool, this particular trust, 96% of it are going to be refinanced labeled loans that are securitized into this. So it's a high probability that someone has a refinanced loan that has this trust pool name connected to it, and there's going to be some connection based on the research. Of course, that's something that the auditing team does, but this indicates to you, okay, this is a high percentage of refinanced labeled loans in this particular trust. It's good information to know, obviously, okay? And then even here it tells you, the occupancy, so basically 97 of the loans, okay, are owner occupied of these loans that are securitized into this trust somehow, okay, or monetized or along those lines. So it even goes that much in depth. So this gives you an idea of how in-depth that information is, okay? How in-depth the organization or the classification goes. So if you look here, okay, now you know owner-occupied loans, 97 of them are in here, 97 loans, and that's a 92% of the balance, okay? And you see the vacation homes. There's 3 vacation homes in there, okay? 8 investor homes. So it gives you a breakdown of that. And even here, it'll give you a breakdown of the if it's a single family or 2 to 4 family. So again, this is all information that is good to have when doing research or when looking at these screenshots. And again, at the top here, you'll see the CUSIP number as well here in the top left-hand side. Okay, going on to the next screen. Okay, and this is again just going more in depth. Basically, this basically gives you a geographical distribution by state. So obviously, in this particular pool, as you can see here, it's actually telling you that most of the loans, 96% of them, yeah, 96% are California. And then you have the other states, but $13 million of this of the balance of the loans in this particular trust are from California. So again, that's good to know because it's one of those things in the research. Again, this helps. Okay, so again, that's giving you the geographical. Okay, and this is giving you the servicing distribution. Okay, as you see these different banks here. And you can just read which banks they are right here, and it gives you the balance percentages here, and even tells you how many loans are being, serviced by each particular company here. And this is interesting because this one here actually has a remaining of one, and that remaining one loan, actually, the servicer is not mentioned. That's interesting. So see, that's something that can be further researched there. See. And here, you have, this is more like along the lines of, market curves, um, you know, of different rates and yields along those lines, over different time periods. So like you'll see here, 1 month, 3 month, 6 month, 1 year, and then life here. These terms here, even have a 30-year, even down to a 6 month, okay? And there's a spread and there's a duration, and this is all technical information relating to the yields and those type of related information. So this is technical information, that gives that information more along the lines of investor related type information, but also good to know these type of information as well, because even here, as you see, it's a collateral section here. It kind of gives you like, the LTV, loan to value ratios, and the FICO, giving you averages, relating to the information. So it's good information to have. And again, this is investor related information, historical total return. You can pause this and kind of take a look at it, get an idea. But this is something that just gives you like a historical of what type of return this is giving. Again, this is investment side information, but still good information to have here. Okay, um, because as you can see here, um, there's dates and there's the pool balances and interests and total P&I and that type of information. So these particular screens, that was the an example I wanted to show you. And next I will just go over some other examples of some other screenshots. Just 2 more for example purposes. And again, here you have it. Basically, again, this is going to be a different trust. Okay. And again, you see the technical data here. And this is the first one of the screens. Now, this is more of a different different flow. The first one I showed you is more of the you want to kind of look at the first one, second one, third one. Obviously, the summary screen is important because it gives you a summary. This is more kind of in a different, showing you in a different sequence. However, it's still good information. Like this here. See, again, this is the summary. This is a bond summary here. So this one here, and this one here is actually, this is a larger number. If you see here, this is a much larger, $500 million balance here. Okay. This is a much larger trust, securitization trust, and it's good to compare so that way you can get an idea of, one trust compared to another. And it's interesting to note that even this particular trust started out at a high number. And now if you see at the date of this, when these screenshots were taken, these are obviously from the past. But again, this particular securitization trust, it started at a high number, $500 million. And the current balance is $27 million. Again, that's interesting to note that. Um, And this one here, actually, when you look at the top here, okay, it will tell you, for example, obviously the issuer, okay, there's an ISIN number here, okay, and here, is obviously important information. We call these the transactional parties, transaction parties in the report. Uh, it's called the servicer, the lead manager, and the trustee, and they're listed here, okay? And then you're going to see the CUSIP here in the middle, okay? And here are the percentages. And this one shows you the rating. So this one actually has a AAA rating. Well, actually, it started with a AAA rating. And the current rating, you see it changed to the NR, then S&P rated it at NR, and then Moody's rated it at this one here. So you can see that in that little box here. Okay, just moving along here. And again, this is, okay, so this is the group summary. So one thing to note, and this is interesting, this is obviously when you're on the terminal, these different tabs here. So this is each tab, like number one, bond summary, number two, group summary, three, comments. These are going to be different tabs. So when you go through each tab, it's going to show you. So that's like one of the ways, that's done. Obviously, sometimes they change the user interface. However, it's still going to be the same structure. Okay. But yeah, so this one here is going to be the group summary tab. Okay. So again, giving you the similar information. Okay. Now this one, it's telling you, showing you a higher balance, and then it's telling you a balance as of current, as of the date there. There's a date listed there. Okay. Um, And so here on item 10 shows you the collateral summary, 168 loans. So that means that there's 168 loans in this trust. If those of you that are wondering, sometimes that could be a good question that people ask, or wonder, how many loans are in a trust? Well, in this one here, you see there's 168 loans that are in this trust. And this is a mortgage-backed securitization trust along those lines. So this is going to be 168 mortgage loans that have been securitized. Okay, moving along here. This is just a comments tab. Sometimes you'll see comments here. For whatever reason, they're putting a comment, maybe something relating to the trust or some key piece of information or something relating to it. So this here is basically telling you that this pool of loans, it primarily has adjustable rate loans, and adjustable rate loans are loans that adjust, right? So like, for example, if somebody has a 5-year adjustable or a 10-year adjustable loan, as you know, or if you don't know, the loan is fixed. Like, let's say you have a 5-year adjustable loan. Well, that means that your rate is fixed for 5 years, and then it adjusts based on the index or whatever index margin it's connected to along those lines. So so this one here, this particular trust of those 168 loans that were listed, that were mentioned, it's saying that the primarily consisting of adjustable rate loans, first lien position, meaning that's the first loan, right? Like if you have a first and a second loan. So this is saying that most of the loans in here are first lien positions, okay? And it's residential mortgage loans. So that way, as an investor, like let's say an investor is interested in investing, they can look at this information and know what type of pool or securities they're investing in. But this is good information, even as a researcher. And as me as a database researcher, obviously, I like when I was early on in my career, obviously this is one of the things I looked at, and now you have an idea, and certain trusts, certain securitization trusts, will be known for certain things, like in the secondary market, people will maybe mention a particular trust that's known for a certain type of loan, or known for a certain type of securitization. Because you have to understand, this is a market, okay? These securitization trusts are being, invested in, and dividends is being paid out, and there's interest, and so you know um, over the years you might have a trust that pops up more than others, or you might see a trust that is known for filing certain things. So certain trusts might have certain reputations. I guess is a good way to mention it. But yeah, going along here, and this is the structural summary, kind of giving you a breakdown of the structure. Okay. And this one actually, one of those words that people like to throw around, right? The tranche, which I've mentioned in one of the modules, but this is actually telling you tranche type. Okay, so you see there's different tranche types, and that's listed here. These are different like codes or labels type things. Okay, um, so you see that here, and then you see the credit enhancement, the structure. Okay, again, this is technical information. But yeah, that's what that screen mentions there. And this is the overview tab. Um, so again, just giving you some of the information they already reiterated. Again, the tranche types, the balance. You see some other percentages here, and the collateral overview here, showing you the collateral. Again, showing you how many loans are in there, as you see here. So here's the historical payments, okay, the bond, the principal, the interest, and that's showing you that here in this bottom right, and some other information here relating to the structural overview. And I will be going and showing one more example here, and that will be the example module for the screenshots, okay? And here is another example of a set of screenshots from the terminal. This one here, again, started out at a high balance, you see here, and then the current balance it shows you there, okay? And this one here also has the ISIN number here. It's telling you the servicer, the lead manager, and the trustee there. And again, you see the ratings on this side. And the CUSIP number here. And again, the group summary. And, it's good to have an idea of, when you're looking at these, just take a note of the balances. I mean, obviously these are big numbers, the balances, talking about, millions of dollars here. So it's a good idea to get an idea as you look at these screenshots, to get an idea of, what level of, money, of values that we are looking at, because obviously when you're looking at a file, or when you're looking at, a loan, and you see the loan is, let's say, $250,000, and then you look at this trust and you see, a balance of, some of the examples we showed, $500,000, this one has a current value of $68 million. So think about, how that relates, and what is going on here on the secondary market and this information that we're looking at. This one is actually interesting. This one is telling you that and again, this is the comment screen. This particular trust is has in this comments here negative amortization loans, okay, and adjustable rates. Now, negative amortization loans were the loans that they were during the refi boom. There was these loans called negative amortization, and basically it was like some of them had like a pick a pay option where you had a loan and you're either purchase, refinance, however they did it. I believe refinance was a big one, but you have somebody refinance into a negative amortization loan, and the minimum payment, would be very low. Like for example, and again, this is example purposes. Let's say somebody had like a $500,000 loan, right? And they refinanced it, so now they have a new loan. They took out cash out, let's say 600,000. So they took out 100,000. Now they have $100,000 cash out. Now they have a $600,000 loan, and that was a refi, cash out refi, right? Cash out refinance. So now, if they decided to go with the negative amortization loan, you would have four payment options. With the loans nowadays, obviously when somebody gets their bill to pay their mortgage, it's one payment, right? That's listed on there, right? And there's one payment. Here's your payment, like okay, $900, pay your mortgage by this date, right? So the negative amortization, the pick a pay loan had four payment options, and one of them was a minimum payment, right? They called it a negative amortization. So that pick a pay, the reason why they called it pick a pay is because you could pick which one you wanted to pay. So when you paid the minimum payment, which was like very low, I mean, it would be like even on a $600,000 loan, it would be like $300 or something. I mean, don't quote me on that, but it would be very low. Okay. So, and then you'd have a second payment option, interest only. And interest only would be like, let's say $1,000. And then the third payment option would be principal and interest, let's say $2,000. Okay. And then there'd be another payment option. So, obviously if you pay the minimum payment, the negative amortization, the $300 payment option on that list, when you got your bill, your balance was going to go higher. Okay. And, you know, there were differing opinions on that loan, but obviously that was, a loan that, that was had a result to that. There was a result of obviously people paying that or people that did not understand what type of loan they were getting. So now their balance is increasing, and so now their equity is shrinking. So there was mixed opinions about that. Obviously, that's something that type of loan, I believe, from talking to different people in the industry back in those days, they would say that was mainly for investors. However, it could also, paying a minimum payment and having your equity go up and having that towards having selling that loan to homeowners, obviously, that's risky, right? So that was one of the things that, one of those loans that obviously you don't see nowadays. So obviously there was an issue of that. I mean, you could possibly find a similar loan like that, but you don't see it on a wide scale as you did back then. So going back to this screen, you see that this particular trust, okay, has those type of loans securitized into this. Okay, so that's one of the things you have to keep in mind here. So that's so now as a person looking at this information, you have an idea of these type of loans are in here, including also adjustable rate as well, adjustable rate loans. And again, here is the structural summary, again, showing you the structure. Okay. This is similar information we've already gone through. Okay. And again, here's the overview. So again, it's just different figures for each trust. You'll see different figures, different balances. Really, just just when you're looking at these information, this gives you the information about the securitization trust. It gives you the information about the balances and the ratings and, what type of loans are in there. And that's good as a person, who is learning and trying to find different information about different trusts. So, as we saw here, like this particular trust here. Now we know that this have negative amortization loans that have been securitized into this. The other trust had, first lien position loans or other type of loans, and other trusts could have other types of loans in there. So it all depends, it all depends on the trust, the securitization, the banks that are somehow connected to it, or doing business with them. So, that's really the one of the lessons as well, is that there's different types of trusts, securitization trusts. So, you might have one trust that securitizes one type of loan or securitizes multiple types of loans. You might have a trust that has a lot of loans in there. You might have a trust that has a very high balance than another trust. So, and then there's an investment side, right, where, there is dividends and interest. So now you have an idea of, these screenshots and, what this information means and translates, because you as a consumer or a homeowner looking at this, it will mean one thing to you. And then as an investor, obviously, you can kind of gauge, well, why is it that there are investors investing in this? Why is it that, investors want to invest in this? And when you see these type of numbers, you can kind of get an idea as to why. And so, which, gets, which fits into the whole, securitization business and the securitization and, why they're selling these loans and why they're securitizing it, which is why it's important, to have those documents looked at. And obviously with the entire securitization, industry, of getting this information and seeing how it relates to the loan. And then, obviously, having that information where it's a tool to help the public and help the consumer and to help the people out there. So that's really the lesson for this particular video as well. I hope you guys enjoyed this example module. I know it's a lot of technical information. I would recommend maybe pausing it here and there and kind of looking at some of the information and looking at the screenshots. But absolutely, thank you so much for watching this video, and we'll see you in the next module.